Are you looking at selling your property company? What considerations do you need to make sure your company is going to get the best value for you when you sell it? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Selling your property company is a very big deal. It means you've got to the point where you're like, I don't want to get involved with the tenants, or you might be taking things in a different direction and you need to be discarding this company so you can go in a new direction with your property adventure. So what do you need to be thinking about when you are selling your company? And the key starting point is we just need to remember here, we're not going to be selling the properties, we are going to be selling the shares in the company. Careful consideration needs to be made, and you possibly need to be doing a bit of pre-planning before you're ready to actually sell. So you're preparing your company to sell so that you get the best possible result in terms of the price that you're going to receive for your property company. So what things do we need to be thinking about? And let me share some bits on screen. Now, the first thing that we're going to have to do when we're selling our property company is we will be engaging with commercial solicitors. So you want to use some appropriate solicitors who are going to be dealing with the legalities of selling a company. Now, these are corporate solicitors. They will bring property solicitors into the equation because there will be property paperwork to be dealt with probably. However, it's going to be the corporate solicitors who sort the contract in terms of selling the shares. Now, whoever is going to be buying the company is going to be doing their due diligence. And that means they're going to be asking lots of questions, asking about financial records, legal standing, contracts, all of these different things that hopefully you have in place. And this is where some of the pre-planning comes, because they're going to be looking at certain documentation, which will go down in a minute. And you just need to have pre-prepared yourself for enabling you to give this information. And obviously you want to be giving as positive a standpoint on this information as possible, which is why you may need to be a little of pre-planning so you know exactly all the evidence that you need. For example, if your properties are worth X amount of money, maybe have some comparatives to show why you've got it at this value at this point in time. So when they go and do their research to check how much it's worth, they will agree with the amounts that you come to because that's what they get to as well. So other bits we need to think about is financial structure. So at present, you'll have your financial accounts, you'll have all of your information in terms of the profits you're making, which you obviously want to make look as good as possible. We don't want to be doing anything we shouldn't be doing, but we do obviously want to be making them look good. So this may be making sure as you're approaching the disposal of your company, you want to be renting everything out. You want to be maximising what you're renting it out for. You want to be minimising costs, not spending less because you don't want to spend the money, because if there's repairs that need doing, you need to do the repairs. However, you want to be making sure those repairs are done in a good way, so hopefully that's going to stand the test of time and it's got the right finish, it's got the right look. So when you do take them round, which any potential buyer will want to go around to your properties, will be able to say, yeah, the house is looking in good condition, and they're happy, and they're not going to be looking at, the roof needs doing, and this needs doing, and that needs doing. So actually the value of the property is lower than you're expecting. We need to remember about our personal guarantees, because these are very important for you as the seller of a company, that these are removed off you. So with most mortgages these days, you will have a personal guarantee on if it's a buy-to-let or property mortgage. So when you're selling the company, you want to make sure that you are not going to be left on as a personal guarantor when you're no longer involved in the company. So this is a really important one that needs to be addressed. Things need to be transferred, and obviously with the buyer you choose, you need to make sure the bank is going to be happy with that buyer so that they can transfer that personal guarantee from you across to them. Now, Another area we need to kind of just mention is tax implications, because you need to understand you are selling the shares of your company. And in selling the shares of your company, that means that you're going to be paying capital gains tax. And capital gains tax will be at your 18 or 24%. And on the basis that it's a property investment company we're talking about today, there won't be any business asset disposal relief available for that disposal. So you're going to be paying 18 or 24% for the value of the shares. And the reason I say the value of the shares is very important, because if you've got a director's loan account that needs repaying, in your contract you need to make sure that as part of the purchase they agree to pay you your director's loan account and in essence swap out, and there's no tax implications on paying your director's loan account. Another one to consider is if you've got any private investors. How are those private investors going to be paid out? Potentially they want to put the money in and your private investors be repaid, all as part of the sales process, and that money doesn't want to come to you as value for the shares. The value for the shares wants to be whatever, I suppose, the less of those figures is, so that you're not paying too much capital gains tax that you don't need to be paying. Stamp duty is a real important reason why people will look to buy your shares. The reason that it's important is because obviously for residential property it's the 5%, then it's 7, 9, 12% as things go up in value over the stamp duty rates. For buying shares, they are going to only be paying 0.5% for the value of your shares. So it's a very important and crucial point, because that is one of the attractive points of buying your shares. So you need to make your company as attractive, as easy, as safe as possible, so that it gives you the best return, the best results on what you're selling. Let's move us on to what documentation you need to be aware of, what you need to possibly be sharing and showing to a potential buyer. And these are the bits that, knowing that you have to show them to someone, you need to make sure everything is in order, everything is correct, everything is square. It paints the best picture on your property company as possible. So let's have a look at the list. So we've got proof of ownership, so potentially your land registry ownership paperwork, make sure that is all correct, make sure that is all in place. Have you got all your planning consent? So if you've got HMOs in Article 4 areas, have you got your planning permission? Have you got your licensing paperwork in place? Have you got your building regs? So any modifications where you did your refurbs, have you got all your building regs certificates in place and easy to find? Any of your property information, you may need to be doing information sheets for the solicitors, so that will be something that you potentially need to do for each of the properties. And there's potentially fittings and contents forms of what are you going to be selling with the properties. And the reason I say that is because if you are looking at potentially HMOs, you'll probably be selling with all the furnishings and fittings in the property. If it's semi-furnished or it's got white goods and things, it's confirming that all those white goods are going to be transferred with the property company. Obviously, in property companies, you may also have things like your computers, you may have tools and kit. So are you going to be taking those with you, or are you going to be passing those across? Some of these things just need to be addressed, because if you have a director's loan and you have a laptop, you may kind of go, well, the laptop's worth X amount, I'll take that in lieu of some of my director's loan account, so that it all transfers correctly. So it's all of these little niggly bits that you just need to have thought through. How are you going to be addressing it to make sure that you don't have any sticking points or any issues? Other bits we have is like leasehold information. So if you've got rents that are apartments or flats, service charge statements, which would be for flats and things like that, and any other relevant documents. So we're kind of talking things like utility bills, rates, council tax, insurance documents, your fire safety certificates, your license document. It's all these different bits which you just need to make sure you've got an orderly filing system and everything is together, because theoretically when you pass over the company, you can pass over all of the company records. Every box that you've got to do with that company wants to be passed over to the new owner, because they're the ones now responsible for the company, whether it be the period they've owned it or the period before. So any financial records, any other bits, that all wants to be boxed up and passed over to the new owner, or electronic formats, possibly put on a hard drive to transfer over to the new owner. Now, some essential documents that we need to be aware of, which you can see on screen. We've got our proof of ID, because with anything these days, solicitors and different people, all parties will want to be able to check that. Make sure you've got your EPCs all up to date and in place for all your properties, because that is going to be an important one. And make sure you've got other certificates for any other works that you've had done on the property. Title deeds are probably just something that you want to make sure you've got in place, so you know exactly what the part of the property is that you own and you know exactly where it is. Obviously these can be downloaded for land registry if you've not got copies of the previous bits anyhow. But these are just some documents that are things to have in place. This is just to make sure the sale of the company goes as smoothly as possible. You've got all the paperwork in place, and I think organisation is very key to this side of things, because then you're making it as easy as possible, and hopefully that encourages your buyer to put in an offer as the highest possible offer rather than a lower offer, because they've got to deal with all the mess that you may be leaving behind, which hopefully if you're organised, got everything in place, then there is no mess to tidy, so it makes it a more attractive proposition for the buyer, and there isn't anything that they need to do. They've got it all in order. So some other considerations that we need to be making. Company's condition. Is everything clean? We've got no complications. We've got a simple structure for it. Maybe consider the early redemption charges, and that is one to just be aware of. Early redemption charges. If you're buying it, are the mortgages all coming to an end and suddenly they're all going to jump up because you've got loads of refinances to do? That is something that maybe you want to happen, that everything's come to the end so the new buyer can do refinances. It may be someone wants to come in and have mortgages in place and they don't want to have to go through that process. So there's tweaks one way or the other, which might be a preference because it's easy to get you off the personal guarantees if it's at the end of a mortgage, or they may not want to because actually you've got a 10-year and it's at a really good rate and that's more attractive to them. So it depends on the buyer what is going to be the attractive point there, but having discussions around this hopefully then kind of sees what they're looking for. Any mortgage consent just need to be considered, because if you've got mortgage consent, will they be able to get mortgage consent? We've obviously talked about capital gains tax being something you need to be aware of as the seller of a company, and your selling strategy is whether you are going down the route of selling the company or whether you're going down the route of selling the properties. So it's something to consider, what is the right option for you. We've obviously been talking about selling the company in this video, but if you can't sell the company, you may need to sell the properties and then look at dissolving the company. But have a look at how the tax implications may be to make sure it's the right option for you. As always with this sort of approach, if you are selling your company, if you're selling your properties, speak to your advisors, speak to your accountants, speak to your solicitor to check how everything fits together so that you can be maximising what you're getting out of your property portfolio. Obviously, this is going to be something you've built up over time. So you want to be maximising what you've done so you can move on to the next chapter, whether that retirement, whether that be exiting the property sector, but then you can be doing everything in the right way and what's best for you and make the right decisions for you. Good luck selling your property company. Hopefully today you've discovered what steps you need to be taking now to get your property company ready for selling. If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing.